Happy Monday, everybody. Today is February 9th, 2026, and this is your Monday market update. Now, let's get right into it. Last week was a reminder that markets don't move in straight lines. We saw sharp rotations, heavy selling in parts of technology, renewed concerns about AI spending and the labor market, and then we saw a powerful rebound to finish the week. Volatile? Yes. Unusual? No. Markets started February on firmer footing. On Monday, investors looked past late January volatility in precious metals and crypto and focused instead on stronger U.S. manufacturing data and signs that a brief government shutdown would be short-lived. Cyclical stocks and small caps led early, helping stabilize sentiment after a shaker prior week. The Dow was up 1.25%, the S&P up about 0.5%, and the Nasdaq up about 0.5%. By Tuesday, the tone shifted. Markets began to show signs of rotation as investors reassessed valuations, particularly in mega cap tech and software. AI-related stocks came under pressure as questions resurfaced about that capital spending, profitability, and the return on investment. While the selling was concentrated, it was persistent enough to drag on the broader market. The Dow was down about 1/3%, S&P down just under 1%, and the Nasdaq was down about 1.5%. Wednesday extended that theme. Selling pressure in technology and semiconductors intensified, while money rotated into value-oriented and defensive areas of the market. Labor data also began to flash yellow, reinforcing concerns that the economic momentum may be slowing faster than expected. Once again, the weakness was narrow but meaningful. The Dow up just over 0.5%, S&P down about 0.5%, and the Nasdaq down about 1.5%. Thursday marked the low point of the week. Markets fell to new year-to-date lows intraday as multiple concerns converged. AI skepticism deepened, jobless claims and layoffs rose more than expected, and volatility picked up across asset classes. Risk appetite faded as investors recalibrated expectations around growth and Fed policy. The Dow was down about 1.25%, S&P down about 1.25%, and the Nasdaq was down about 1.5%. Then came Friday. After several days of heavy selling, markets staged a sharp rebound. Technology stocks bounced, Bitcoin stabilized, dip buyers stepped back in aggressively. The Dow surged to close above 50,000 for the first time ever, a psychological milestone that helped restore confidence into the weekend. The Dow was up about 2.5%, S&P 500 up 2%, and the Nasdaq was up just over 2%. For the week as a whole, the Dow finished up just over 2%, S&P 500 slipped down slightly less than 0.5%, and the Nasdaq fell just over 2%. The big takeaway is that this was not a broad market unwind. It was rotation. Money moved out of crowded trades, particularly tech and AI exposed names, and into cyclicals, defensive, small caps, and international markets. That distinction does matter. Now let's look ahead because this week is packed. We have three major economic reports that will shape expectations around growth, inflation, and the Fed. Retail sales for December arrive tomorrow and will tell us whether consumer spending held up late in the holiday season, as it started that way. The delayed January jobs report is expected on Wednesday, and expectations are for relatively modest job growth, with the unemployment rate holding relatively steady. Importantly, this report will also include benchmark revisions that could revise prior job growth lower, which may affect how markets interpret the headline number. Finally, January CPI is scheduled for Friday. Core inflation is expected to continue trending lower on a year-over-year basis, even if month-to-month numbers remain choppy due to seasonal factors and price resets. Layered on top of that data is the very active week of Fed commentary, as I like to call them. We'll be hearing from a lot of the Fed heads this week, which can add to day-to-day volatility. Here's who's speaking. Today, we're going to get Waller, Moran, and Bostic. Tomorrow, Hammock and Logan. Wednesday, Schmid, Bowman, and again, Hammock. And Thursday, Logan and Moran will both speak again. That's a lot of microphones, and markets will listen closely for any shifts in tone around inflation progress, labor market softness, and how close policy may be to neutral. We also have a heavy earnings calendar this week. Cisco will be closely watched for signals around AI infrastructure demand. Coca-Cola and McDonald's will give us some insight into the consumer. And we'll also hear from Ford, T-Mobile, Shopify, Airbnb, and Coinbase, touching autos, telecom, e-commerce, travel, and crypto. As always, guidance will matter more than headlines. The bottom line is that last week tested patience, and this week will test expectations. Volatility tends to rise when markets are forced to reconcile strong long-term narratives with short-term data. It doesn't mean something is broken. It just means markets are doing their job. As always, stay focused on your long-term plan. It matters far more than reacting to short-term noise. We'll keep watching closely and we'll keep you informed. Have a great week.